All right, so we'll just take a look at ES for now. That's where I took my trade this morning. Yeah, so coming into today, this is the daily with my most of my drawings taken off it. So this is currently live. This is not on bar replay mode. So yesterday we finished the day with this candle with a wick on top, but we did leave this large daily imbalance here, which I wanted to get hit. So as you can see, we had on Friday the massive sell-off we all know about. We took out a ton of liquidity here. And this is bearish order flow, but you would want to see this get tapped into before we go lower. Now coming into today, that's what I was waiting for. Overnight, let's go to the 1 hour. Overnight, we saw price creep up. It was pretty lethargic. And then it came right up into, this is that 1 hour zone. Not only that, I had marked in here prior to today, no wick. This candle had no wick on it and we had a fair value gap. And where did price go? Right in to clear that no wick. And as soon as I saw that, we'll take a look at what I saw, what I was looking for then on the, okay, this is market open. As you can see here, we came right up into that no wick zone. And at this point, my eyes were all on this fair value gap. And we'll keep NQ open in the corner here. I wanted to see how price reacted when we took this liquidity. Let's do that. Say it's freezing up again. I'm not sure why it's doing that, but we can see it clearly here. As soon as we inversed hit this, I set my limit order here. We came up, tagged me in. And I wasn't being greedy, even though I knew, not that I knew, but we had these relative equal lows here. We had this 5 minute with equal lows here. And then we also had relative equal lows here. So I was fairly confident if we did take out this high time frame liquidity zone in bearish order flow, we were going to move quite quickly. The only thing I thought that maybe we might hit it and then range for a little is because we do have CPI tomorrow. And I thought the CPI move was going to be the big driver that really gave us a lot of this sort of momentum. Anyway, it was an awesome trade. So I entered here and I was just looking to get this wick. I have consistency rules on a lot of my accounts. So going for rockstar risk rewards of like 3, 4, 5 just doesn't really make a lot of sense. I'm quite happy getting out at a 2R. It's more than enough because I am going in with heavy size. So yeah, this is like kind of a dream of a trade, but also it's a textbook example of where if you were not looking at higher time frame narrative and you came into today and you saw, oh wait, great, Asia showed bullish momentum. We saw the same thing in London. I think this is a reversal pattern. We're going to go back up and start hitting all this liquidity up here. If you're doing that, you're just not looking at higher time frame. Higher time frame was clearly bearish. We had about as clear of a draw as you were ever going to get on higher time frame, as I showed you here. Like, this is textbook. Just imagine this is the 5 minute. Like, forget these are daily candles. We have all of these stack lows with all of this liquidity below, and we have a massive engulfing candle on the daily. If this was the 5 minute, you would go shorts. You would wait for this to get tagged, and you would take your shorts to target this liquidity. And even if you look, a lot of people are too, like myself, I was very anti going short for the longest time, but there's a change in character. As you can see, look at all of these days, you pretty much take liquidity, even every bearish day, take liquidity, go higher, take liquidity, go higher, come down, take this liquidity, go higher. What's the difference here? We take all of this liquidity and we see none of that bullish momentum come back in. Even yesterday, we just came up, tagged into this large inefficiency, and yeah, we're not seeing any urge to push higher. So then today, what am I going to look to do? I'm going to look to continue with the bearish order flow, like especially we have such clear targets below. So yeah, it's a real reminder just to always start on the weekly, daily, 4 hour. give them, they always have the highest significance. And with that overall higher time frame narrative, then you can go down to the lower time frames, the 5 to 15, and then find an entry that is in line. It's aligned with the higher time frame narrative. So yeah, awesome day. It's been an awesome week so far. Last week was like a little shaky, which it can be. When we start ranging like this, and we're not seeing any breakout up or down, it can be a little tricky for my model. But once now we're after opening back up again, as you can see, large displacements, and yeah, it's about catching those moves. Like as I said previously, these are days where it's been a while since I even got a 2 hour. Well, not a while. I was getting a lot of 2 hours on the way up here. But knowing to size your R multiple down in the raging conditions, be happy whatever your model allows for. If you're usually hitting 3 hour trades, knowing to go for maybe 1.5s as we're ranging, and then as soon as we start to open back up, you can start pushing again for the 2, 3, 4 hours like we are now. And like the ATR is elevated right now, the VIX is elevated. So these are times where let your trades breed. Don't be cutting them early. Like today's an awesome trade, especially for the swing traders out there. This is a trade like with an entry like this and a lot of targets below. This would be a great overnight hold.